Hi, it's Jeffrey Cohen. How is everyone today? It is Friday. Markets closed, February 18th. Hopefully you can hear me okay. We're going to talk about the markets. We're going to talk about a busy week. And so just to start it off, the stocks that we look at on a day-to-day basis, just to walk you through, very few of them were up today. This was definitely a down day, definitely not a good stock picker's day. Stocks from Walmart down just a little. Your pot stock ETF down almost 3%. Bitcoin down quite a bit, 4.5%, 7%. For Mara, for Riot, lots of pot stocks down significantly. And so, question is, what's going on with the market? So when you look at all of the stocks that we follow, you see the red. All red all day, pretty much. Maybe a little bit in the morning, maybe in the evening. Things looked a little better. Let's look at it by market cap. Some of the real small caps, 14 million, 33 million, are up. Again, trying to set themselves up for success when the market turns around. But for everything over $1 billion market cap, pretty much down with the exception of Verizon, Kimberly-Clark, and Hewlett-Packard Enterprises. So, pretty tough day. I just want to talk about what I'm seeing in the market. So, we had called a top to the S&P 500 at 4,432. We called that about September, October of last year. And so we had said that we're going to peak and then we're going to drop. And you can see we had a local minimum peak here at around 4,550. 4,700, almost 4,800. It looks like it closed just under 4,800. Then you have another peak here at 4,600, and now you're back down to about 4,350. And so 4,432 is it's not a bad level. If I were to look at the 5-year chart, the S&P 500 has been up pretty much nonstop. But you can see here that the market is just showing some weakness. So the times when we've had good volume have been red days. So here on September 17, here on January 17, and then on January 24, we had a short recovery, which allowed the market to make a little rise, but that rise was on declining volume. So here you see very low volume on this rise. So when the S&P rises on lower volumes, makes you a little bit nervous. So not a real show of strength. Now, the other thing I drew a purple line here is because, it's interesting. It drew differently. So let's go back to what I thought I was drawing here. So Jeffrey, how long has it been since the market closed roughly where we are? And right there, it's been July 2nd. So from July 2nd to February 2nd, the S&P 500 has been flat. It's touched the level in early October. It's touched the level in late January. So we see a pretty flat market. So what this tells me, lacking a lot of confidence in this market from a big picture, large cap stock perspective. There's conversation about how this is about Ukraine, but I'm just not sure, and I'm going to show you. So let's look at Finviz, and let's take a look at the S&P 500 map. This is the one-day map. So if we look at the market, you see tech for the most part is down. Financial services is down, with the exception of insurance and some of the large diversifieds. Your consumer cyclical, generally down, except for things like restaurants. Very, very small parts of the market that are up. Telecommunications is up. Property casualty insurance, some basic materials, specialty chemicals. But in general, market looks pretty weak today. Look at that. GE down almost 6%. John Deere down 3%. Boeing down 2%. Abbott down 3%. These are big names. These are defensive names. Dish, Intuit, Intel, NVIDIA. These are companies that are feeling the effects of the really the change in the economy right now. But let's go back a week. I did this just to take a look, and you see that over a week, very few areas of strength. Some drug companies, some consumer defensives, tobacco, packaged foods. Pretty tight for a week. Very red. So let's look over a month. Over a month, energy has done very well. Financials have done well over a month. ServiceNow, AppV. So these are T-Mobile. These are very specific stories. Each one of these has a story. Lodging is up because with COVID numbers down, things are freeing up. Humana. The sound that you heard was the sound of the market dropping even after hours. So you see agricultural inputs, steel is down, or steel is up, gold is up. So real question about, if you looked at this market a month ago, would you have thought Tesla was going to be down 12%? Oracle, Adobe, AMD, Intel, would you have thought these would be down in double digits? Probably not. Would you have thought that American Express was going to be up 21%? Probably not. So it's been interesting. The highs are very high, the lows are very low. Philip Morris, you might have thought, because, good dividend stock. Another way to look at the S&P 500 is to look at the SPDR, which is an ETF. And so when you look over March, April, May, June, July, August into September, you see relatively low volume, not a lot of big moves, going up, not a lot of risk. You get into September and you start to see the MACD line swing negative. So you start to see distribution days in September. So it's your first warning. That's when we started to call market top. But then coming to October, November, into December, you saw some strength with a return to the moving average. And then really since late December, since the Federal Market Committee meeting, you've seen weakness where we've been lagging the 50-day moving average. And you see the lows getting pretty low here. And so I'm not sure, for those out there that are momentum players, this is negative momentum. So just heads up, things are pretty rough. So I thought I would take a look. There's a lot of news about Ukraine. We had published a Black Swan event for those who follow us, for those who follow our website, back, I think, around July, August timeframe. And we had said it's early, right? But this could affect the markets. We've since removed it because it's no longer a Black Swan. It's now just everyday news. And so when you look at the news today, right, it's pretty bad news. In fact, it was pretty bad news this morning. And so I wonder if CNN is a leading indicator of how the market's going to go. Just really negative news. The latest on the Ukraine border crisis, they looks like the Russians blew up a kindergarten. There's talk about violations of the ceasefire back and forth, both sides. But you know what? As of now, no invasion. Again, I just wanted to remind people, right? So when there's a discussion about Ukraine, so Ukraine's a pretty big country, right? Ukraine is an important country because it's very close up here to Latvia, Lithuania, Estonia. These are important, the Baltics. You got Kaliningrad, which is Russia. And then, so you see how, and those are, and St. Petersburg up here. These are traditional kind of Soviet satellite states that are in NATO, that are protected. Now you look back to Ukraine. You got Moldova, very strong Russian ally. You got Crimea, Sevastopol, Crimea, which used to be Ukraine 14 years ago, became part of Russia. And you see where Ukraine's got the border right here. So you got Voronezh, which, come on, I used to outsource procurement services to Voronezh. It's actually a nice Russian city. You got Luhansk, you got Donetsk, this is the area where the fighting is happening. And, down here you have Georgia, Azerbaijan, you've got, kind of interesting areas geopolitically. But what makes the Kiev story interesting is that with Russia moving troops into Belarus and moving them down here, you're not quite on top of Chernobyl, but you're close. So I want you to imagine you're going to invade through an area relatively close to Chernobyl. Belarus, the whole thing, right, moving from Minsk, the capital, to Kiev, the capital, is about 434 kilometers. For those who like miles, we're 270 miles, right? That's from capital to capital. It's not a lot of room. This is like from Chicago to the next state, right, down south. And I've pointed this out before, when you get in closer and you look at where the tanks would have to roll, you see this is all Belarus right here. This line right here, hope you can see it. It's important that you see it. There's some nice roads that can, now over here, Chernobyl, you're not going to go through Chernobyl. I mean, if you did, that's a really gutsy move by the Russians. Wow, I don't even want to think about that. But you can come through the Dnieper River and the reservoir here and really in no time at all. If you can secure either coast of that waterway, you're in Kiev in under an hour. And you can see how the Dnieper comes up into Belarus in two different places. So you can really launch some amphibious units nicely into Ukraine. But the bigger thing is the roads. The roads into Kiev are not bad. These are not bad roadways. Especially if things are frozen, you can ride where there's not roads, where there's just rural areas. But you can really come in. If you follow the line from Minsk to Kiev, you could probably be at this airport a couple hours at most. So all this news on the Ukrainian crisis, all this crying and angst, look, I don't see it. If it happens, it happens. If it happens, it happens very fast. So don't follow the CNN. Don't get all tied up. Some school got bombed. That's not where this is at. Where this is at is Maxar Technologies runs a lot of satellite runs that are public that you can buy, commercial satellite services. And just watch the border here. Watch for field hospitals. Watch for tank concentrations at major roadways. Because to come in and to pick up the Ukrainian road system, or along the water, to come in through the water with some nice, artillery support, you're landing troops at the Sikorsky International Airport in Kiev a couple hours. And once you do that, the war's over before it starts. And God help us if the Russians come through Chernobyl. That would be a very, very gutsy move. But possible, right? So that's how I look at it. We talked about the S&P. I want to show you the map of the S&P 500 of the full market. So I showed you S&P 500 for a day. Let's look at the full market for a day. And you see that some of the small caps are doing okay. TJ Maxx, Yum Brands. These are companies, Netflix. Maybe they can raise price at Cisco to keep up with inflation. AMD, Texas Instruments. But when you look at the whole market, it's much more red than it is green. Go back a week. Jeff, how was the week? You probably should have stayed home if you were long. Capital markets are down 5 to 10% overall. Energy is down, which is weird because you got oil at like $93 a barrel. All your IT providers, your software, semiconductors, tech, consumer electronics, your diversified banks, your regions, it's all down for the week. If we look at the month, right? Should you have even traded? I don't know if I can do year to date. Yeah, I can do year to date. Right? So you probably should have been in energy, tobacco, banks. That's about it. Maybe some travel services if you thought that, COVID was going to drop down. Aerospace and defense looking good year to date. Probably because of Ukraine, but again, no surprise. Airlines look good because of the COVID renewal. The COVID numbers coming down. You got BHP, Rio Vale, the minerals and mining, tech is up, so not bad, tech resources. But in general, probably should have stayed home. There were just few sectors that are up year to date. I'm going to show you what we've been up to, just because I think it's important. So if you look at the watch list, and I am not going to talk about individual stocks that we own because I don't want to cause any problems here. But if you look at the market overall, these are just the stocks we follow. 3 of these stocks we own, but I'm not going to mention them. But you see, today down 7%, all the way to up less than 2%. And markets are struggling. When you look at the volumes, this is the other thing. If you look at the volume versus the average volume over 3 months, 1 or 2 stocks have higher volume. CRON is a pot stock, slightly higher. If I don't mention the stock, the volume is lower. Now this is odd because today is a big options expiration date. It's February the 18th. Any February individual stock options expired today that were just kind of your standard February options. ATI Physical Therapy has slightly higher volume. ICHR, Icor Holdings, slightly higher volume, actually 50% higher volume. Some of these volume numbers are significantly lower. Oh, there you go. Google's up in terms of volume. PayPal's up in terms of volume. So there were story stocks. Facebook, that's up. What do they call that now? Metaphysics or metaverse or something. But yeah, most of your volumes are down, and it's odd. It says that how I talked about it, right? People staying home from the markets. Options expiration is a non-event. Market is down dramatically. This is what it is. So let's talk a little bit about the firm. Chicago Quantum has been very focused. So we're focused on our stock optimization services. We have recoded the guts of our classical models, our up and our down portfolios. We took our level of precision from about 10 to the minus 6 to 10 to the minus 20. It's a lot of precision. Doesn't really change the numbers very much, but good for you to know. Recoding. We're also recoding, and we're right in the middle of it. We're working on the notebook now. We're recoding our D-Wave code. We're recoding all of our quantum code. And in fact, we're going back to much older code base to take what we've learned, to apply some of what we used to know, and to see if we can get the D-Wave system to give our classical model a run for its money. I would say for a while now, using the new D-Wave Advantage system, we fell backwards, and so now we're working very hard coding in the quantum space, actually reading some quantum computing textbooks, I guess you'd call them, to make sure that there isn't something that I might have missed out there. We are going to work with quantum tech this year, so that's pretty exciting. Yeah, we're getting out there. It's good. One of our client projects, software development projects on quantum computing, has ended. The client's writing it up, and we'll see. We'll probably do some kind of joint promotion with them, help get the word out. It was more research oriented, but very, very cool. And once we have some approved messages, we'll do that. And we've been reaching out to companies. So if you're one of the companies that received one of our letters, that received one of our brochures, don't be afraid to give a call. Got a landline right here, got a cell phone, ready to take your call, got a team ready to work with you, ready to run quantitative analyses, ready to work with you if you'd like to develop your own proprietary analyses, which we would help code for you. We're with you because the odds are if we reach out to you, you already have a big quantitative team, and we just want to be helpful. We believe we have found an edge. Now, it's hard for me to pull some of this information up, but if I go to Yahoo Finance, some of these stocks were in our short run, and we did a paper trade just to share with you. So we had talked about go short SLNH. This was paper trade a week ago, Friday into Monday. So Friday market close, we had suggested short SLNH, LWLG, and FUN. We had just said, look, do 100 shares each. But of course, you don't have to just do 100 shares each. We'd come up with the prices that we would have executed at for those 100 shares. FUN, which is at 318, was 347. So you would have made 31 cents, assuming you could have sold it at the close, just price on close. LWLG was at 759, and that was assuming that we paid the full bid-ask spread. You're at 671. So it's 98 cents. It's not bad. SLNH is only down 9 cents. This is not a very volatile name, but it's a negative name. Other down stocks in our previous runs, I'm not saying that this is our most recent run, but go back a week, 2 weeks, 3 weeks. Cortexamy has been a long-term short of ours, reaching all-time low. AADI, RGC, these are all downs. GameStop made our list as being a short. B Square is a short, although it was up today. There's a few others. And so, Workhorse. I love the story about Workhorse, but Workhorse is a short in our model. I believe Aurora Cannabis is a short in our model. And Tilray. Tilray is a short in our model. As pot stocks, we're actually supportive of the pot stocks. We think they're going to be going up at some point, but when the market turns. So pot stocks, Bitcoin, crypto, a lot of the tech is going to go up, semiconductors with the S&P 500. And so challenge I'm having with the S&P, right? So if you want to get into a stock like Mara, let's take a look at Mara. I'm going to add it to the list here. Now, unfortunately, it's Bitcoin. What color is Bitcoin? Let's make it green. Okay. So you see Mara over the past year. It's been extremely volatile. Too volatile. You can't do it. You can't actually show it on the same chart. Let's do it this way. So here's Mara. So when the market comes up a little, Mara goes up a lot. When the market drops a little, it goes down. And this moves really with Bitcoin. And so I could probably do the same chart with Bitcoin, right? Now Mara's been down just tremendously. But as long as the market's up, Bitcoin's up, risk is on, Mara does great. You can see it was at $75. Hit a low of about, I think right here, it was $20. So Mara is an extraordinarily high beta, moves with the market. We're going to look at that hourly. We're going to look at it over 5 days. It's just too hard to look at it. So take a look. When the market bounces up, Mara bounces up. When the market comes down, Mara comes down, and Mara continues to move. And so Mara is like a 5-to-1 or a 4. It's actually between 4 and 5-to-1 multiplier in the S&P. So you can hold the S&P. You could actually hold Mara, and the options are super expensive. But you can do straddles and spreads, and you can go long, short. You could try to not have to pay for all the premium. But I look at this and I think you got to have a lot of guts in this market. You have to have a lot of capital. We don't have a lot of capital, so we are sitting back right now. But if you were to have gone short the stocks that our model said that you should go short starting January 1st, if you would kind of learn the lesson from the FOMC, you would have made a lot of money. And so That's why with our business now, we've got a long and a short. And I just want to tell you that it maybe you feel like it's hard to go short, but honestly, it's not hard to go short. It's not hard to pick the bears, to look for that needle in a haystack, right? You get your list, and then what we also give you is a spreadsheet with every stock analyzed that made the dog star or the down list. You get an order list of the worst 25 stock portfolios. Maybe you don't want to pick the worst one. Maybe you want to pick the 10th worst one. Maybe you have certain stocks you're already short and you want to kind of layer in a certain set of stocks that you want to go after. But we also tell you, right, there's top dividend payers among the dog stars, right? So maybe you don't want to get caught shorting a high dividend stock, or maybe you do. What's the beta? Have there been price spikes? Have there been volume spikes? Have there been splits? Things like that. All kinds of things about, kurtosis, skewness, variance of those stocks. So that's if you want to look at the down run. If you want to look at an up run, you get your all-star list. You get the ordered list of all the stocks that made our up run, right? You get your best 25 portfolios. You get your kurtosis, skewness, variance analysis. You get your top 150 stocks. Maybe you want to pick 10. Your bottom 50 stocks, the stocks to avoid, even though they're kind of in the Santa's nice list, right? You still want to keep away from high beta, low beta, negative beta. You get stocks that have had price spikes, volume spikes, splits, and other historical data. And so what happens is you get this run. Most clients of ours would want to get this run, let's say, 2-3 times a week. Maybe they do an up, a down each week. Maybe they do 2 ups, 2 downs, and they want to know, right, where should I be? The stocks change not that frequently. It's not like they change every day, but some stocks come in and out. And so you end up with a nice point of view on the market. You can see where the pressure's building up, where if a stock is very high risk and very low return expected, you kind of watch it rise and you think, all right, where am I going to call the top and where am I just going to short it all the way down? And so where we're at, we're doing well. We made money last year. This year we are definitely on the prowl for new clients. And as we pick up new clients, we'll be hiring again and looking to build up the business. So thank you very much for listening. Appreciate it. This is Jeffrey Cohen, and I approve this message. Bye-bye.